Hey, how's everybody doing out there? Let's see what we got. Let's go to my streaming details here. I got people on. We got people coming in. Looking forward to this. What's going on? Can everybody hear me okay? Can you let me know in the chat if y'all can hear me at least okay? We've got obviously a special guest, Alan, with us today. So I'll just give it just a minute. Let everybody join here.
Hey, everybody.
I can hear myself talking, so it must be somebody's hearing me. Bitcoin.
Out there. Let's see what we got.
A little bit of sneaky. There's a high, there's your low, there's some pair of highs, and there's a low, there's a higher low and a higher high. Sneaky. Bitcoin being sneaky. All right, let's see. Let's go back to chat here. People can hear me at least. Bye. All good. Yep, we good. We up. All right, everybody. Well, welcome. Usual disclaimer. I want to start with this. Make sure I do this right. So anything that you hear here today, Alan or I, as far as Alan goes, I don't know. As far as I'm aware, Alan's not a licensed financial advisor. I'm certainly not. I'm also an idiot. And if you listen to anything I say, you're going to lose 1,000% of your money and end up living in a van. And a happy little van, though, down by the river. So hopefully at least you're happy if you lose all your money with us. But you will lose all your money. So don't listen to us. We're idiots. Okay, with that out of the way, I got a special guest here, Alan, with us today. If you don't know who Alan is yet, we did a little pre-recorded session this week, just introducing Alan to the community. So go watch that video. It's the last uploaded video I have. It was uploaded yesterday. You can learn more about Alan and his background, his schooling and background in investment. But follow Alan on Twitter, AlanAU11 right here. I'm gonna put it in chat. Be sure to follow Alan on Twitter. Obviously a fantastic follow. The reason we have him on the live session today is to help answer questions. He's put out so much good information. He's got some really good thoughts. So we're gonna let him share some thoughts that he has. I'm gonna go ahead and stop sharing my screen here. And so we've got, again, Alan joining us from Hong Kong. That is the city lights in the background. Alan, say hi.
Hi there. Thanks for having me, Brandon.
No
really
problem.
Appreciate it. Yeah.
Thanks for being here. So I've got some questions from CTM that we're going to get into after. We're going to let Alan open up here. He has some information he wants to share with us. So obviously you guys know his tweets and you see his tweets, but what I thought would be really cool is if he could talk through some of the thought processes that he puts into behind those tweets. So Alan, if you want to go ahead and share your screen there and we can take a look at that. We're looking at Alan's long-term Bitcoin price chart. And so what we're going to be focused on today is really what I would call macro analysis of the Bitcoin model, where we're at in the cycle, our 4-year halving cycle, and what we can look forward to for price action, some price targets, things like that. So Alan, all right.
Can you see that okay?
Yeah, we can see you got a couple of things up here. All right, here's Alan's awesome log chart. So he's going to walk us through some price projections for this cycle. And you guys can see on this chart here, we've got some resistance that we're running into. We got to snap through that. But go ahead, Alan, take it away.
Yeah, because Jordan has been talking about what the peak price is going to be for Bitcoin. And I try to use the BLX liquid index for Bitcoin to do that. Here you're seeing a monthly log chart for Bitcoin in the previous cycle as well as the current one. I have two things up here. First thing I want to show you, like we can use Fib extension to determine what the peak price of Bitcoin is going to be. Obviously we can't do it now, but I'm going to show you how to do it. This is the parabolic move of the first cycle with a lot of data here. Right here is the 2013 one. So what we do is that we find the base point of when the parabolic move starts, and you see that it shoots up and then it kind of corrects dramatically. Okay, and that's the 3 points we want to use to draw a Fib extension. And Bitcoin usually peaked between 3.618 and 4.618 Fib. And if you average out those two prices, that is pretty close to where top price is. And in the first instance, in 2013 one is 11 17, and the average is about that. Going to the 2017 bull phase, we do the same thing. And if we do the 3.618 and 4.618 FIP, average out to be about $19,000. So you're pretty close to the peak of about less than 4% difference. So we haven't seen that the dip yet. So we're expecting that. And once we have that, we can chart where the top price is going to be. The other thing that I did was I used the launch angle of the various bull phases and see what it's going to be. In the first one, you can see it's 69 degrees. And the second one is 63 degrees. And assuming that, I wouldn't call it diminishing return, but using that trend, the launch angle is about 57 degrees. So if we peak at around the 21st of September, then you get a price of about $200,000, okay? Now, assuming that it's an average between the two cycles, the launch angles, so you get 66 degrees, and the top price will be $440,000. And then one other thing that I did was I draw a trend line with the two peaks of the previous two cycles extended to the 21st of September, and I got $270,000. So I think Bitcoin is going to peak between these any of these numbers, and this is similar to what a lot of people have been talking about. Even Jordan has been telling us this cycle is going to peak around that. But obviously, we have to look at the price action to see if the launch angle and the parabolic move is going to be similar to what I put up here. So that's roughly what I want to share about this. So maybe we can entertain some questions if people have questions about that.
I'm muted. Oh, there we go. Yeah, so a couple of things. Just I want to say that I've done some similar, price analysis, trying to come up with price targets, and using not the log chart primarily, using other methods, but the log chart too. I guess I use my BLX chart too. I keep coming up with myself from a very broad range, 150 to about 500,000, an extremely broad range, and I keep coming up with high 200s. So I've kind of adopted, stock to flow. Plan B's $288,000 target as a good, median number for a potential top price target. But yeah, I've come up with very similar numbers a bunch of different ways as well. Now on the BLX chart, Alan, let me ask you this. I see there is something I didn't catch before we went live, but it's good. I'm learning. So I'm looking at my BLX chart. Let me go to mine. Let's go to the month. So yeah, we've printed one monthly red candle. So on yours here, it looks like but we've got the monthly red candle that we've already had. So what we're looking for is the next green candle to help us to properly triangulate the launch angle. Is that correct?
Yep. So much, and also determine the FIP. And according to previous cycles, we may not have seen the major correction before the final blow off top. So that may not be it, but looking at very, very closely. So
yeah. Okay. And so the other thing too is looking at on-chain analytics where we're at right now. So, back to we haven't seen the correction. I think that the correction that's probably coming up after the next move up is going to be bigger than the correction we've had here, because we've had a series of smaller corrections. I think there's one big correction coming. Right. Question is, would that be I don't even know if that's going to be a red monthly candle. It might be to open a month and then it recovers green, because we had the small red candle. But you're right, we may be heading for a bigger correction in the future. Now, let's look at questions here. See if everybody's got some questions. So we got Carlos asking, Alan, do you think there's going to be a dip soon, or the dip is what we just had? So what do you think, Alan, on the dip?
Right now, I think we should be on track for a major move, and then we're going to have a a dip after that. But I think we have enough dips already, so it's about time that we have a major push up. That's what my thinking is. But you never know, because like I said, the institutions are getting into the space, and they're using a lot of derivatives to influence the market price. And so I have to also look at the derivatives market to determine if that's going to happen and when it's going to happen. But I will alert everyone on my tweet once I discover something interesting. Yeah.
Fantastic. Yeah. So I think on a very so just understand that what Alan's doing here on this log chart is very what I would call macro analysis. It's very long term. Looking at the full cycle as a single impulse, basically, or a series of impulses, but it's really one large impulse from the breakout to the top with some consolidation and some corrections in there. And it really ends up being three major impulses from what I can tell. Is that, do you kind of have that same analysis? We talked about this. So in the preview video that we did before this session, Alan and I both talked about how we both got faked out, right? So we saw the breakout, the third higher high was made after a couple of corrections, and that move to 65,000 faked a lot of us out, because it looked like we were going to make this next impulse up and then a major correction, but we ended up having a smaller. Was it a 30% correction we just had out? Let's see here.
27%. Yeah.
27%. Yeah, we said a 27% correction. It looks to me like we're headed for another potential breakout and leg up. That's a much smaller time frame though. But Alan, your thoughts on, so we talked about this, right? That there's really three major impulses, three major moves in the bull market. Is that correct?
Mm-hmm. Yep. In the final blow up top end, I think Jordan covered that extensively in his live streams. So like he would say, there are three waves. So we're in the first one, and there will be another one, and then the blow off top. So we're on the first one right now. And after this one, then we have a dip, major one, and then we go to the second one, and then the final blow off top. Yeah.
Oh, I got sneezed. Okay. Yeah.
Bless you.
So, do you mind? So now, trying on a shorter time frame, you have some thoughts about trying to figure out maybe shorter term price targets based on options expiry. Do you have that data up that you wanted to share about the options expiry?
Yeah. So hold on a sec.
And I'm gonna hunt for questions while you pull that up there.
Okay. So today I did a tweet. I want to show everyone how I determine the price action of Bitcoin on a short-term basis looking at the open interest of options, and so everybody can learn and do it themselves. So basically, look at. First I want to introduce Deribit. Deribit is the largest BTC option exchange in the world, and the volume is a lot higher than CME. So I use that as my basis. So you can go to their website and look at the options. So you see that in CME, for CME options, they expired on the last, I think the fourth Friday of the month. Yep, on the last Friday of the month. Whereas at Deribit, they have options on number of days during the month, so you have to check that. And so usually the largest volume would be at the end of the month, so to speak. So right now I look at the open interests of the May 9th and May 10th and May 14th. Okay, so May 9th is tomorrow, Mother's Day, and then Monday, and then next Friday. So that's what I look at first. And then in checking out the open interest on May 10th, you can see that there aren't much, so you can ignore that. On May 9th, there's decent volume. So look at the strike price and run down and look at the open interest for the various prices. And then you can see here, so this is that's open interest. So that's the number that I want to focus on. So look at the volume on the volume. The open interest on for the puts. Puts is if you are bearish, and calls if you are bullish. but you have to do it kind of backwards, because people who write calls are the ones that they're selling calls. That means they're bearish on BTC. So you look at for instance, like 60,000 strike price, you have 174.8 BTC for that strike price option contracts outstanding. So looking at all that, that's pretty high. So that's a major resistance. And similarly, if you look at the puts, then you look on the other side and you see, okay, the highest one is like 128, so and 126. So you can see these are supports. Okay, so it's how you read it. And when the price drop below that price, that becomes a resistance again. So kind of like your trend lines. That's how you read the open interest. And then then I look at the May 14th one, which is the one expiring next Friday. You can see that a lot more volume here, and you can see at $60,000, there's 1,821.9 BTC worth of contracts outstanding. That's pretty high. So that's the major resistance point, $60,000. And look on the puts. The major one is at $50,000, 1,409.6 BTC. So those are the 2 points I want to focus on. So going back to my tweet, so I said I'll look at the options expiring on the 9th, 10th, and the 14th, and the one on the 10th is the one I'm going to ignore. I'm going to focus on the 9th and 14th. And then after looking at the open interest, then I can determine the support and resistance levels. Support is at $58,000 and $57,000, and resistance is at $60,000. And looking at the options expiring on the 14th, the put call ratio is bearish. It's 1.11. So after looking at the open interest, then I can determine like if BTC is trading at $58,000 and above, bulls are in control. Otherwise, bears will be ruling and will be in control. So the likely range would be $56,000 to $60,000. But the maximum price, if it breaks out this range, the maximum is $70,000. The minimum price is $50,000. Okay. Then look at futures as well, because it's really important. Because if the futures market is really overextended and high levered, there'll be liquidations, and that will cause the price to drop. So that's an important metric to focus on. So look at the open interest. When open interest is increasing, usually the price is bullish. So you can see there's a slight uptick right there. So it's looking good. And also the other thing you want to look at is funding rates. Funding rates is the call will have to pay shorts. So they're quoted as rates compounded daily. So you have to analyze that usually if it's 0.1, it's like 20+% and so on and so forth. So you want the funding rates to be below 0.1% for the market to be quite stable. So right now we're at that stage. So futures are good. So now we look at TA. If you follow my tweets, I was saying that if Bitcoin falls below $53,000, we have the potential of setting up a head and shoulder pattern, but that didn't happen, so that was good. And now we're seeing an ascending triangle being formed. If you look at the target based on that chart pattern, it actually can go straight up to the price target of the inverse head and shoulder pattern. Okay, you see that? So I'm seeing if it's going to play out. If it plays out, then we can see a price target of $67,000. And then I just talk about that, and then I look at when it's going to happen, and it's going to happen on the 14th. And options right now, it's telling me that there's a major resistance at $60,000. So the option callers would be trying their best to hold a price in that range. so that doesn't go up above that. But if Bitcoin is going to be able to pierce above that $60,000, it can shoot up. And according to the BLX log chart, the reason why I'm using that, because if you look at the trend lines, I use that. I use the auto clone function of TradingView to the auto clone all the trend lines, and you can see that Bitcoin's been following that very closely, surprisingly. So I'm using that to determine price action of Bitcoin. So that's the May 14th. And I'm saying that if Bitcoin is going to be able to prop above $60,000 and it can trade above $63,000 by May 14th, then it's going to be able to reach a new all-time high. So that's my take on that, and about this tweet. So that's how I use options and futures to look at the short-term price action, and use trend lines and TA to like kind of check if that makes sense. Does it make sense to you, Brendan?
Fantastic stuff. It all makes great sense to me. Now, you're a little bit more, so I've largely ignored the option space, and it sounds like I need to start. So my problem with tracking options is options expiry kind of for equities. I noticed that it produced a lot of false signals, false information, because like you said, if you break out of an expected range, then things go completely counter to what you might think. And that's the other thing. So, but when options become a larger and larger part, when derivatives of any type become a larger and larger part of an underlying asset, they become much more important to the asset's trading and how its trading behavior. And so what Alan's picking up on here is, and one thing I think Alan is trying to stress is that obviously, now that we have all these different derivatives and exchange markets that are available to take advantage of trading Bitcoin and crypto markets, they're going to have a larger and larger impact. They're going to continue to be influential and more influential on price action. And so we can now, instead of, and we can now start to use this data to help us to track things properly. But I think that was fantastic, Alan. I think I think Alan should be a regular. We should get some regular updates from Alan. What do you guys think out there in the chat? I think this has been super beneficial. The guy, I see some people asking about shorter term charts. So you had your chart there. You have the inverse head and shoulders. You have, now the thing is, none of us know exactly what's going to happen tomorrow in the market. I want to also stress this. So Alan and I are both looking at, based on a lot of things, I'm looking at some on-chain metrics. I'm seeing very bullish behavior on-chain as well. And then you see this with the options, the way the options are playing out, we're gaining support at 57, 58,000, which is giving us a little bit higher support than we've had. And we've got some resistance. If we break that resistance of 60, this could really start to move. And that's kind of what we've all been saying and seeing. And so if you look at Alan's chart here, we look at the short term, we don't know for a fact if price is going to break up until it does. It looks probable. It looks to me like that's what direction it's heading. But until it does, it's really tough to try to project. Now, somebody had asked earlier, let me see here. One of our CTN members, Carlos RS asked earlier. I'm just gonna state the question. So I said I was waiting for a breakout above 59,000, and then a retrace back into support for me to add additional leverage myself, light leverage. Now, if you're looking to buy spot, this may be a different situation, but if you're looking to buy lightly leveraged, as you can see here on Alan's chart, if we get that breakout, what's going to happen is you see that level, Alan, where's that blue line? Right at 60K, right? Coming in on your chart. That's kind of the main resistance level right now.
Yep.
Is that right? 60K?
Yes.
Yeah. And so for me, if we break out above 59,000, 60,000 or so, what we're going to come back to is this market structure that we're in right now. And the the February peak is what I'm looking at. I want to buy once we clearly break out myself. Let me look at my chart here while we look at yours. So that a prior peak that we had in February 21st was 58. It looks like 58,400 roughly on my chart. So what I'm looking for is a clear breakout above 58,400 really, and then come back into that level. But if we break out above 58,400, and if we break out above 60, and then come back into 58,400 myself, and then resume off of that, we're very likely headed higher. those are the levels I would give you guys to look at. And you see here, Alan's the inverse head and shoulders. Several of us have been seeing this, and he's got this. You identified, Alan, here, this ascending triangle here that I hadn't seen before, a wedge. But so those, to answer your questions on short, that's my thoughts on the short term price targets we've got here. I think a breakout of this level that we're looking at, namely 60,000, and coming back into roughly 60,000, 58.4 all the way up to 60,000. That level would be a good time to buy after breaking about above it as it retraces back into that level for support. That's my opinion. Alan, any thoughts?
Yeah, I absolutely agree. Yeah.
Okay. Very good. And then so, you know, as far as going back to our macro, so I hope that answered your question there, Carlos. Now Ace asked for some stuff about DOT and ADA and everything else. Since we have Alan on the show today, I might what I'll probably do is I'm gonna save. I'm gonna go live again tomorrow night, my Sunday night usual. Let's talk about alt season and where we're at with alts more tomorrow night. But since we have Alan here, I want to stay focused on Bitcoin and what we're looking at short term with what we're looking at with Bitcoin next year. And so, Alan, did you have any other? I don't know. Did you have the some of the on-chain metrics there? I thought you had earlier, or did you have something else you wanted to share? I'm sorry. I'm gonna let Alan go back. Alan, what was the next thing you wanted to share? Let's just go there.
The other thing I want to share is I put out a previous tweet, and I think I want the community to be able to use that. Determine the peak. Coach Jordan was saying that he can get out in one go, and he's absolutely 100% certain when that is going to be. And he's using price action, and I'm trying to see if I can do that with on-chain metrics. So I look at all the on-chain metrics indicators, and I found two pretty good ones. The other ones, they're way off. So the ones that I'm going to focus on is the MVRV-ZC score, and that one is pretty accurate. And the other one is the 1 year hodl wave. So I'm going to share that right here. Yeah, that's the tweet about that. So basically, the MVRVC score stuff, you can get it from Look Into Bitcoin. That's free of charge. The other ones, even Glassnode, you have to pay to get it, but this is free, so everybody can look at this chart. It's not live, so to speak, but it's only off by 1 day, so you're pretty close once you know what I'm talking about here. So what this score is saying that it determines when BT is extremely undervalued relative to fair value.
Hey, I'm going to pause just for a second, Alan. I'm going to put a link to what Alan has here since it's a free resources. I'm going to drop that in chat right now so you guys can follow along with Alan. Sorry, Alan, go ahead.
Yeah. So this that's the pink zone is between 7.5 and 9. That's when Bitcoin is extremely extended in terms of price. So that's the time when the peak is coming. So how do you know when the peak is coming? So I noticed that every time when the peak is going to come, BTC is going to do a 5 peak and trough move for this MVRV-ZC score. And look at the 2013 bull phase. There are 2 peaks, and it got both of them pretty good. So look at the first one. So you can see that it first got into the pink zone. That's the first peak, and then there's the second one is the trough, and then the third one is the peak, and the fourth is trough, and finally it peaks out. So you know at 0.5, which is the last peak, that's the point when Bitcoin price peaked out as well. So you will notice this pattern all the time, and to time out when to exit is once it enters the fourth trough, you know the peak is coming, so you kind of time it out. And so basically between the fourth and the fifth move, there's only about 1 to 3 days difference, and the price of Bitcoin is not doesn't vary that much. It's about 2 to 3%. So you'll be exiting very close to the top. The second top, I want to show you that there's a that's a false move, false start, so to speak. And you can see it plunges through way above 9 and then drops right back down. So that one, we don't count that one, okay? So we start recounting again. So it starts when it re-enters the pink zone. So in this case, it went way above as 0.1, and then the trough is 0.2, and then the next peak is 3, and trough at 4, and then it picks up 5, and that coincides with where the top is. Okay. Some people said they should use the Al-Hodl ratio, and that doesn't give you false peaks. Like if there's a two top cycle, it will skip the first one and give you the right answer when it is, but they will miss that one. So if you're trading and you miss the first peak, then you see there's a major drawdown after the first top. Okay, so if you're trading, you'll lose a lot of money if you don't exit. So that's why I'm saying this one is a better indicator than the other one. Looking at 2017 bull phase, the same thing happened. So it has the five move, peak drop move. So first move just went way above 9.5, and it dropped back down to pink zone. Second, third, fourth, fifth, and the fifth one that coincides with the top of the top price of Bitcoin. So I would use that to also determine when the peak of Bitcoin is going to be. I'm going to use this indicator. Since it's free of charge, you guys can use it as well. The other one is the 1-year hodl wave. Again, Brandon is you can use the same link, and there's information about that. This indicator is also free, so you can get the information. So BTC usually peaks when the 1-year hodl wave is below 50%, and it bottoms when it's about 50%. So to make it simple, so you can notice that the 1-year hodl, when it peaks, you can see these red dots. That's where the last peaks are going to be. So it coincides with the peak, and you can see that this number is going up by the year in every in each cycle. So I'm projecting for this current cycle, the 1-year hodl wave number is going to be at around 47% when it peaks. So that's another indicator that you guys can use to track where top of Bitcoin is going to be. And using these two, and I think is enough. The other ones are good for indicating if we're at the top, we're close to the top or not, but doesn't tell when to exit. But these two are pretty good. So I would highly encourage you guys to check these things out. Yeah.
Fantastic, Alan. Yeah, so the one that I was using more was the R-HODL, but I'm going to have to add the MV-RV Z-score to my and keep a closer eye on that too. So the analysis that you did on that, let me ask you something about the MV-RV. Is this independent analysis that you've done, or did you get some insight somewhere else as well as to how we can look,
I did it myself. If you look at the reference of look into Bitcoin, they don't tell you how to determine the peak. So I just look at the because this is kind of inspired by Jordan. He was saying that he's very sure when the peak is going to be. So I'm just trying to see if we can do the same with on trade metrics. And lo and behold, I found this one. I checked all the ones on this website, and this is the only one that does that. Yeah.
All right. So, all right. Yeah. So I was using the R-HODL. So we'll have to dig in some more. Let me pause here for a second. Let's take a look at what the community is saying here. We've got, but yeah, this is fantastic information, Alan. Thanks so much for sharing this as well. I think, one thing that I want to remind everybody, we get a lot of questions about altcoins and everything else. I will share with the audience, again, not financial advice, Van by the River. I pretty aggressively over the past week or two, and So also think my time preference is fairly long. Like I'm trading in and out of weeks, right? So I'm trying to catch moves that are weeks long, not that day or anything. And so I've been pretty aggressively trimming whenever my altcoins have come into resistance on Bitcoin dominance, or versus their Bitcoin chart, whatever that resistance level is. I've been trimming my alts and moving more into Bitcoin. So I've been moving more into Bitcoin, and then what I'm doing is I'm going basically. I'm taking those profits on those altcoins as they come into resistance on the Bitcoin chart, and I'm moving those over and going leveraged Bitcoin. So basically, for the next move, for the next couple of months, I'm going to have trimmed 20% of my altcoin hold, my long-term hold positions, and move that into Bitcoin. Then I'm going 2-to-1 on that. That's how I'm handling this next move, because what I think is going to happen is I think we're looking at the Bitcoin dominance chart for me, and looking at a lot of other things like Alan is sharing. I think the next move in Bitcoin is probably imminent. And so I want to be personally in Bitcoin, but Bitcoin's a trade. And for a lot of reasons, you see all this data, there's a lot of really good data around Bitcoin and who is buying Bitcoin, how they're buying it, derivatives, options markets, and all these other on-chain metrics. And we can take an aggregation of all this data and get a really good picture. The one thing I want to stress is all these questions about altcoins, and Ethereum's breaking out right now. Ethereum hit 37.36. I mean, as we're talking, Ethereum's going nuts. What I want to stress is Ethereum, Cardano, Polkadot, and Chainlink are my 4 other favorites to have outside of, and then Matic. I'll add Matic as the dark horse. Outside of Bitcoin itself, those are my 4 favorites. But what you have to understand about all 4 of those is, while I don't think they're as speculative as some people want to say that they are, because I think there's actual real world with Ethereum, most definitely. Ethereum has value. If Bitcoin were to disappear tomorrow and all the other cryptocurrencies in the world disappeared tomorrow, Ethereum would still be very valuable because it's doing a lot, and it's the engine that reshapes, finance and DeFi. But it's not as predictable as Bitcoin because two things. Last cycle, everybody was looking for the next Bitcoin, and well, is Ethereum the next Bitcoin? I think everybody understands now, or the majority of market participants are starting to understand now that Bitcoin is completely different. It's a unique asset. It's the beginning of this crypto craze. It's what brought along all this, and it's going to be the store of value, and possibly it's really the reserve asset of everything crypto. Now, whether it becomes a global world reserve currency, I don't know, but it's the reserve asset of everything in cryptocurrency right now, which is a growing market. So the reserve currency for that large market matters. But Ethereum, Cardano, Polkadot, they're still none of them have a monopoly. Bitcoin has a monopoly on that right now. A store of value, gold 2.0, and the reserve currency and reserve asset for crypto. Ethereum, Polkadot, Cardano, Chainlink, Matic, they have great utility and they're great platforms that could go on to be monstrously bigger than they even are today. But we don't know what the real world value for those projects is going to be and how that's going to shift. We don't know if Ethereum is going to maintain dominance and be totally dominant and leave ADA and Polkadot and even Matic to the scraps. My personal feeling is that I think Cardano and Polkadot are going to close the gap in market value on Ethereum as time goes on. Chainlink has a kind of a monopoly in its area. And Matic is going to be like this uber dark horse that could really hurt the valuations of these layer 1 platforms over time if it becomes an uber layer 2 platform. But all that said, the point of me saying all that is that we cannot possibly predict what's going to happen with these altcoins like we can with Bitcoin. The other thing is different. This altcoin cycle is going to be different because, again, people were looking for the next Bitcoin. Now, I think everybody understands Ethereum is a platform. You can, as far as analogies go, a pretty fair one is Bitcoin is gold and Ethereum is like oil, and it's the engine that powers. So it's like getting, buying oil-rich land ahead of the Industrial Revolution, right? That's what buying Ethereum is like, or was like. Now it's starting to be, we're starting to get up there in valuation. But what we don't know about Ethereum is we don't know yet if Ethereum is if Ethereum is Saudi Arabia, or if Ethereum is the East Coast of the United States that has oil but it dried up really fast, right? We don't know. Is Matic Saudi Arabia, and is Ethereum Saudi Arabia, and Cardano is Texas, and Polkadot's a lot. We don't know how rich these ecosystems are going to be yet. So it's a moving space. And so all these other cryptocurrencies are going to be moving all over the place. And this cycle, the market's really searching for the next Ethereum. As what I see, it's actually happening. So Ethereum is its own thing, completely separate from Bitcoin. The market's looking for the next Ethereum, looking at Polkadot, Chainlink, Avalanche, you name it, right? And then the NFT space, the NFT craze, and some other new stuff. But Bitcoin is really predictable. So I hope you understand when we look at this, why we spend so much time and energy looking at the Bitcoin halving cycle, the 4-year cycle, on-chain analytics, and spending so much time and energy looking at what Bitcoin is doing, and then the Bitcoin dominance chart as a proxy for how strong it is versus altcoins. The reason is it's far more predictable. And so I think Alan has illustrated that wonderfully, but I just wanted to, so what we're going to do is I'm going to pause. We're at, how long have we been going here, guys? Let's go back to questions. We're at 48 minutes. That was my little monologue about just understand what Alan's telling you and why, definitely follow Alan on Twitter, use these resources and stay focused on the trade. The trade that's going to be predictable that we can model very well is Bitcoin. Everything else is speculative. And in as much as we don't know exactly how price is going to play out, which ones are going to be strong and when they're going to pop. And a lot of it has to do with the hype cycle. But Bitcoin's fairly predictable and has a pretty consistent engine to it. All right, let me take a pause here. Alan, anything else you want to say to that? I'm going to pause and let you speak. I'm going to look at questions.
Yeah, I agree. Bitcoin is pretty predictable because there are a lot of on-chain metrics and a lot of data, and it's been around for a few cycles already. So people can predict how it's going to behave and do some projection about the price. That being said, it doesn't mean that Bitcoin is going to be the same as the previous cycle, and people are talking about super cycle and so on and so forth. But I agree with Jordan, that's not going to happen in this cycle. But it's a very good trade as compared with altcoins. And like Brandon was saying, it's really difficult to know how the altcoins are going to behave in this season. And Ethereum is behaving a little bit different in this cycle than the last one. So we have to really look and watch closely.
Yeah, exactly. And another thing too, is Al and I were talking before, as far as like trying to position ourselves in and out of altcoins, I think I'll have to cover this tomorrow night because I think we want to stay focused on what we're talking about. But we've already had a pretty big divergence this cycle in several ways than last cycle. And the thing I identified a couple months ago, I put out some videos. I was like, you know what? I think Polkadot is a better analog for Ethereum this cycle than Ethereum is. I think Ethereum is going to much more closely track Bitcoin. And I want you guys to pay attention to something. As Ethereum right now, as I'm looking at 37.48. Remember last summer, who broke out first? Ethereum led out the gates as Bitcoin was gaining strength. As Bitcoin was basically consolidating, Ethereum actually shot out the gates ahead of Bitcoin. I'm kind of seeing the same thing here. I think Ethereum and Bitcoin are going to move pretty closely together. I think the market is understanding that again, Bitcoin is digital gold and Ethereum is digital oil, as it were. And so what it is it's funds flowing between those two. So in the real world, you might actually have funds flowing from precious metals into commodities and then back into precious metals. And I see something similar happening right now where Ethereum is actually leading out the gates, and then profits come flowing back into, or money comes more flowing into, your precious metals equivalent. And so I'm seeing that, I'm watching this price action play out, but also again, Ethereum has been very different this cycle than last cycle. The last thought I'll have is that this consolidation we've had on Bitcoin is also very different than last cycle. We've had more consolidation this cycle than in the other two cycles. Well, I take that back. This is between the double peak cycle and last cycle. Last cycle was we had basically three major impulses and then a blow off top. And then the first cycle was a double peak with the impulse in between. And this cycle is kind of in between. We had a very strong early start. It's not going to be so much a double peak, but this one's going to be much more of a a move, a lot of consolidation, probably an impulse correction, and then the blow off top. That's what I'm starting to see as well. I don't know if you have any other thoughts on that, Alan, as far as where we're at today. I might share a Bitcoin chart here in a second. Yeah, let me share my Bitcoin chart here. I'm just going to share my screen here. Do you have any thoughts there, Alan?
Well, it's surprising, like some of the analysts are putting out more conservative estimates for Bitcoin price recently, like Mike McClone of Bloomberg. He was putting out a price target of $400,000. And now seeing that the Bitcoin price target is going to be like 100,000. So the reason being that he's saying that there may be more institutions getting involved, and the price action of Bitcoin is not falling what it did in the past cycle, and we may peaked a little bit earlier and at a low price. So we're seeing some of that, and it's hard to tell. But I still believe that Bitcoin should be tracking very close to what happened in past cycles, and unlike Ethereum, it's breaking mode, so to speak.
Yeah, exactly. Well, so, and there's a lot of people are going to put. Well, I've heard a lot of talk about like some of the patterns that we have here. And one thing is a lot of these chart patterns people use. Bitcoin being a brand new asset class, asset type. It's not going to behave like equities, where equities are bound a lot by their fundamental valuations. People talk about how Tesla's overvalued. Well, based on a lot of valuation metrics, it's book value, forward earnings, whatever. And so the people that think that Tesla's a good value have a very strong growth projection for it, and therefore it will justify, it'll grow into its valuation. People that are bearish on the valuation of Tesla think it's got a weaker growth projection, yada yada yada. But nonetheless, it's still bound to those metrics that equities are bound to. Bitcoin is bound to no metrics. It is an asset class, it's an asset type. And it's only bound by the average market participant's understanding of it and acceptance of it. So the analogy I use is if tomorrow morning, everybody in the world woke up, we all miraculously agree that Bitcoin is superior to gold. Well, Bitcoin's market cap today is about $1 trillion. If every market participant agreed tomorrow that Bitcoin was more valuable than gold, then we would instantly teleport the price of Bitcoin to 500,000 plus, or roughly right above the market cap of gold, because it's worth more than gold. And so, it would instantly get there. And it's just a matter of all the market participants coming to the acceptance and realization that this is a store of value that's more valuable than gold because it's digital and it can be moved either, whatever, right? And so if that were to happen, so it doesn't take much to move the price of an asset like Bitcoin drastically. And that's the other thing to keep in mind too, is all it takes is a little bit of understanding in the market, or a change of perception in the market, because Bitcoin has no underlying metrics that it's tied to. It's not tied to its forward earnings or its book value or anything else. It's purely tied to market sentiment and market understanding and participant realization. And so it can move. And so a lot of these chart patterns people are looking for on a very short time frame, they probably work fairly well, because there is a typical supply and demand movement of assets around as this asset trades around. But a lot of the topping patterns, quote, that you might try to find are going to give a lot of false signals, because this thing's going through a different type of adoption. And it's going through a different, the market's coming to understand it and a different adoption curve than other assets in the past. And I want to illustrate this by looking at this. If last cycle, to people, we see like people trying to call these topping patterns. If you go back to last cycle, just last cycle alone, there are so many patterns that look like this thing was headed for failure. Like this pattern here, I mean, there's a lot of ways you can slice and dice this pattern look like failure, and it bounced hard and continued up. So I just also want to highlight that chart patterns, there's a lot of other data out there other than chart patterns, and chart patterns are helpful for short-term trading, but in a longer macro sense, this asset is so unique and so different than any other asset that it's really hard to try to use metrics and philosophies that are really geared toward like stocks or other commodities You know, even commodities, right? Commodities are typically bound by typical supply and demand, right? But assets are not. You know, a Van Gogh painting can go up in value drastically if new information is found out about it. It was the only, you know, people thought it was a fake, and now they realize it's real. And by the way, it was the only one that Van Gogh painted when he was such and such. I don't know. And so things can change much more drastically when you're talking about an asset than when you're talking about equities. All right, so those are my thoughts, kind of tagging along with what Alan's been talking about. As far as the charts go, we talked about it short term. I'm just going to stop there. All right. So I've had enough thoughts on that. Let's look at questions. We've had a bunch of new questions come in here, Alan, and I'm going to give you the opportunity here. Have you found any questions while I was talking that you might be interested in commenting on?
Sorry, I was just listening to you. I didn't look.
No problem. So let's see here. Let's see here. Do you think the graph will pop off later on Polygon? So people are asking a lot of questions about other projects. So I'm going to look at some questions here. See if there's anything you want to field. I'm going to field some of these altcoin questions just real fast.
Okay.
Do I think the graph will pop later on, or Polygon has more potential? I think the graph has a ton of potential. So the graph is like one of the main competitors to really Chainlink. So Chainlink kind of has a monopoly because it's obviously works today and it's built out. It has a bit of a monopoly in that space, and it's continuing to innovate. So, but if you look at competitors in that space, API3 and GRT, they could definitely pop big. I have a little bit of both of those, a little bit more GRT than I do. But Polygon is a different space. So, the Oracle space, you know, Chainlink, the Graph, API3, and a few others. They're either directly in the Oracle space, which means you're providing data to and from either outside crypto or between crypto, and providing these Oracle services. That space has its own dynamics to it. It's different from the platform space. The platform space, you know, the Ethereums and Cardanos and Polkadots are the main platforms. And then Matic is that it's an abstraction, basically. It's a layer 2 framework that allows for scaling, but also it's going to, as time goes on, allow for developers to snap into Matic and use multiple underlying layer 1s and be more efficient at doing so because it's a layer 2 scaling solution. So I think they all have promise. When they pop specifically, it's impossible to know. It's really just around the hype cycle. And this is another thing I'm talking alt season. Let me show one more chart, Alan, and then I'm gonna let you field whatever questions you found. I do want to talk about this just for a second. Since we have a little pause here, I'm gonna share my screen one more time. All right. So the current move that we've had, if you look at the Bitcoin dominance chart, I've said, you know, the safe move, we really played from here to here was the time to play trading alts versus BTC and to be aggressive at alts. And then when it consolidated here, trading versus USD was probably the thing to do, which we did really good trading versus USD here as things basically went sideways and everything consolidated. And then this big breakdown, this huge breakdown, if you look at how big of a move this has been, it's starting to find support right through here. I've got a trend line, a little bit of support. This big move, you know, great for playing the alts, but at some point the party's going to end. We don't know when. And Bitcoin's going to when Bitcoin makes its next leg up, this is going to reverse, and funds are probably going to flow out of altcoins back into Bitcoin. So this is the time right now to be kind of defensive with the altcoins. Again, Bitcoin is the trade that matters. The reason the market is moving is the Bitcoin 4-year cycle. You know, DeFi is great, Ethereum's great, Cardano's great. They're all great. But without the Bitcoin 4-year cycle kind of forcing people to understand the space and it really enhances market adoption, things wouldn't be moving the same way that they are. Now, they still might be going up in value, but it would be moving very differently. But as far as alt season and where we're at, this is the best indicator I have to track where we're at. And you look at this move, right? From, let's see, this was late December. From late December down to now, Bitcoin's lost 40% of its dominance. And you see here, this is when Bitcoin last had a really, really strong impulse. Right through here was that December impulse. I expect with all this consolidation we've had, we're going to get another impulse in Bitcoin like that one, right? And so you're probably going to see a similar looking, looking move, you see this move right here where it consolidated and then Bitcoin really started to ramp, you're probably something looks just like that. And then we're going to spike up here, and then we'll have to take a look at levels. Maybe this level is a good, you see this at the bottom of this right here, something like that. You're going to find a level where it's going to spike above and then reverse again. Okay. And it might reverse because there's a big broad sell-off. I think that's why it's going to reverse, but you'll have a big broad sell-off. Actually, that might spike it some more. Bitcoin will consolidate, it'll reverse a little bit, the big sell-off, and then the blow off top. Who knows where this thing could end up? It could be lower than the last time. But you see what happened last market cycle, right? You had the same kind of pattern play out. Early in the cycle, we hit this line, and then we would bounce. Toward the end of the cycle, after Bitcoin sold off, and then, so we'll just keep an eye on it. I think right now it's definitely, if you're being aggressive in trading, you need to be watching what the alts are probably going to lose steam versus Bitcoin. So it's a good time to rotate into Bitcoin, I think. That's my opinion. But and because Bitcoin looks like it's about to make its next impulse up. That's my thought. Alan, did you find any questions there you wanted to comment on?
There were comments about I think about Carlos was asking about the max pain thing, and like what was the max pain? Max pain is usually referred as the put option with the highest open interest. If you look at the options expiring on May 28th, and that's $50,000. It's massive. It's 6,320.7 BTC of open interest on that. So you can say that's a major support, and it could be a major a pain, and it can fall down to that level. But looking on the brightest side, if you look on the call,
can you share your screen? Can you share your screen, and or what was that level you called that again? Because I'm taking notes. I'm literally taking notes.
Share. Okay, let me.
You don't have to share your screen. You can just. I just want to make sure we all got that number.
Okay. You got that?
You got it. I can see your screen now.
So that's the options expiring on May 28th. When people talk about max pain, they're talking about the put option, the strike price with the highest open interest. You can clearly that's $50,000, right? And you can see that the open interest is massive, 6,320.7 BTC. But look at the bright side. You look at the call, the strike price with the highest open interest is $70,000. So I mean, if Bitcoin can stay at about $58,000, it could well go to that level, and even higher. So you can see that at $80,000, there's a 2,961.5 BTC open interest right there. So that's it. And also the other questions about there's the decline in whales, and there's an increase in minimum increase in number of hodlers with 100 BTC to 1,000 BTC. So what happened is that the whales, they're breaking down their the holding into small wallets, and that seems to be a trend because of the institutions getting into the space. They want to break it down, or maybe they want to store their BTC in a few custodians. So you can see some of the wallets were breaking up into smaller wallets. So in total, the decline in the wallets or the BTC, the whales are holding, whales are like people holding 1,000, institutions holding 1,000 BTC or more. If you compare the two numbers, they actually, the subtraction of one is equivalent to the increase in the other one. So they're kind of balanced out. So I don't think that's a major concern right there. Institutions are really buying the dip and aggressively, and they're putting Bitcoin into cold storage, and we're seeing that on trade metrics. So that's pretty clear, and especially in this cycle, it doesn't happen before. So you're seeing some of that action breaking down wallets with a lot of BTC into small ones. The other question is about the contango trade. I also covered that in the tweet, and I'm saying that that's one of the reasons GBTC's premium continues to stay negative and high negative, because institutions are going into that trade. And I want to share a screen here. This is also free information, bitcoinfuturesinfo.com. There you can see the premium of the various futures, okay? What's the contango trade? Contango trade is basically buying spot BTC and selling futures. And since the future has a premium, then you can pocket that, the difference, doing arbitrage. And you can get, for instance, for the June one, you can get up to, for Binance, 31% return. So it's like a risk-free return. So that's why it's so attractive to institutions. So that's another reason the open interest in futures are getting higher and higher, because a lot of institutions are getting into the space. And yesterday, Goldman started trading CME futures and also non-deliverable forwards, which is a cash settled future as well. So the contango trade is getting bigger and bigger. Yeah.
All right.
It also
Alan.
helps with the BTC price. Yeah. It also helps the BTC price because institutions are buying spot BTC. Yeah.
Man, awesome information. Thank you so much. I just realized, so we've ticked over an hour. I try to keep these to an hour, and Alan is up late in Hong Kong. It's probably almost 1 in the morning there, isn't it, for you?
Yeah, it's 1 in the morning.
Yeah, okay. Let's let Alan go, guys. Thank you all so much for joining. We'll probably wrap up here. I'm sure Alan, I'll have him back again. Hopefully he'll be willing to come back and share more data with you guys, in the future. I think this has been super informative. I hope you guys enjoy those free resources that Alan shared. I'm going to take over here screen sharing again and just make sure they get your Twitter page. Here's Alan's Twitter page. I'm going to put it back. I'm going to one more time put it in chat here. Be sure to follow Alan on Twitter. I mean, obviously the research he does, the stuff he's putting out there is invaluable. Super great information. So we want to thank him very much for joining us today. Alan, any other parting words?
Well, thanks a lot, Brendan, for inviting me. Really enjoy it, and love to share that with the CTM community and all your subscribers. And love to be back soon. And thanks a lot, Brendan. Learn a lot as well from you.
Well, appreciate you being here. All right. Well, I'm gonna kick on the music if I remember how to do share sound, and I'll make it stereo so you guys can hear the Doge-wave. Well, let's just leave on some chill. Lee Rosevere wireless. It'll be some chill tunes for you guys. Let's enjoy the BTC pump coming up though. Take care, everybody.